Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Mari kita mulai videonya saja ya. Oke. Taxation in Indonesia. Corporate income tax under Indonesia tax law. A company is treated as a resident of Indonesia for tax purposes by virtue of having its establishment or domicile, a place of management, in Indonesia. A foreign company carrying out about business activity to a permanent establishment or PE in Indonesia will generally have to assume the same tax obligation as a resident taxpayer. Indonesia PEs of foreign company have to settle their tax liabilities either by direct payment, third-party withholding, or a combination both. Foreign companies without a PE in Indonesia have to settle their tax liabilities for the Indonesian source income through withholding of the tax by the Indonesian party paying the income. Income tax is collected of certain types of a transaction such as import of goods, sale of goods to the government, sale or purchase of certain product, sale or purchase of very luxurious good, payment of certain service. Tax rate and period. A general flat rate of 25% applies as corporate income tax. January to December is the normal tax period. However, a different tax period may be used with prior approval from the Director General of Tax or DGT. This tax rate also applies for PE profit. After tax profit, regardless if remit to the home country, are subject to 20% withholding tax or WTH rate. Australian business meeting certain criteria may have access to a reduced WTH rate of 15% through the Indonesian-Australia Tax Treaty. Value added tax atau VAT and luxurious goods sales tax or LST. Value added tax or VAT is generally applicable at a rate of 10% on the deliveries of goods and services within the Indonesian custom area. This may be increased or decreased to 15% or 5% according to government regulation. Other categories of goods and services are treated as follows. Goods exports from Indonesia are subject to zero related VAT, but imported goods are subject to the full 10% rate. With some exception, some exported services qualify for zero rated VAT, including toll manufacturing, repair and maintenance, and construction services, inbound use or consumption of foreign service or intangible good, with few exceptions, is also subject to VAT at 10%. Some goods are also subject to LST upon import or delivery by the manufacturer. In addition to VAT, the current LST rates range from 10 to 75%, although the law allows the rate to be increased up to 200%. Tax incentive. Indonesia offers various tax concessions and incentive for business including tax holiday, in bond investment incentive, reinvestment of grant profit tax cut for public companies, and tax neutral measure. An example of one is the 50% discount on the corporate tax rate for small business with an annual turnover less than either 50 billion or approximately 5 million. Certain requirements need to be fulfilled by business to be considered eligible for such incentive. Please consult your tax advisor for further information. Tax administration or tax liabilities for a particular period or years must be paid to the state treasury through a designated tax payment bank or bank perception, and accounted for at a Indonesian tax office through the filing of the relevant tax return. The tax payment and tax return filing for a particular tax must be undertaken monthly or annually, or depending upon the tax obligation in question, and can also be conducted electronically. Corporate tax return must be filed by the end of the fourth month after the end of financial year, with tax payment having to be completed prior to filing. The deadline for filing corporate tax may be extended by up to a month through written notification, and tentative tax calculation submitted prior to the deadline to the DGT Corporation. Tax can also be arranged to pay in prepayment system based on the previous tax year's liability. The involved monthly installment of payment to be made by the 10th or 15th of each month, and tax return filed by the 20th of the following month. VAT in comparison is a monthly obligation with a tax return filing deadline of the end of the following month, and tax payment required prior to this deadline. Late payment of the above tax incur in interest penalty or at 2% per month, with even part of a month such as a single day considered to be a full month at a maximum of 48%. Late filing or failure to file a tax return incur an administrative penalty ranging between 500,000 or $50 to 1 million, about $100. Tax calculation. Taxable business profit are calculated on the basis of normal accounting principle as modified by certain tax adjustment. Generally, a deduction is allowed for all expenditure incurred to obtain, collect, and maintain taxable business profit. A timing difference may arise if an expenditure recorded as an expense for accounting cannot be immediately claimed